this is Jordan at Pure Elliott Wave here with your dollar index analysis, the Dixie, and this is on Lara's list of free analysis for you all. So I'm going to be taking care of it right now, and if you'd like to see the whole entire article, you can click on the link in the description box below, and you can see I've done a really extensive write-up on each one of these charts here. We're going to go from the quarterly charts all the way down to the daily charts. And if you're into the dollar, into the Forex market, you might be interested in our latest Euro-US dollar subscription, where we publish the euro every day of the week with a video for members only on Fridays. And it's also important to note, and I'll show you in just a minute, that the euro and the dollar do have an inverse relationship. So the outlook that we're looking at here has correlations with the euro dollar. And we can see on the technicals that it's usually a 90 to 100% correlation on the weekly chart. And on the daily chart, it floats usually 85+% to the inverse. And in times of extreme volatility, I've seen it get as low as about 45% correlation inversely. So when the dollar goes up, the euro goes down, and when the euro goes up, the dollar goes down. We can say that is a reliable correlation there. Our analysis is expecting the dollar to move overall downwards and most likely not make a new low below 70. For the short term, we're expecting a bounce to a target of 105, and then after that, a strong impulse downward may begin. That said, let's get into the quarterly chart here. So each of these candles is 3 months, taking off from the 1985 top, and we have a long corrective sideways structure ever since then, with 2 large waves downward, and then we have this very choppy movement upward. And if you think about it, this correlates well with the dollar index because it's comparing the dollar to a basket of other currencies. We wouldn't expect the dollar index to be at 300 or even 5. So this sideways movement really reflects well the ratio that the dollar is compared to the other currencies. So we have a W, X, and a Y at supercycle degree. W complete as a zigzag, X as an A, B, C expanded flat, and Y currently underway as a triangle, A, B, C, D, E at cycle degree. Now what lends me to lead towards a triangle moving forward? Well, this wave here, the B wave, I have it labeled cycle B, is just so choppy, and this last wave actually overlaps into the territory of this wave. So we know that this can't be an impulse, and if you did have it as a diagonal, that would still lead us to expect a correction to the downside. You may be wondering, how do we know this top back in September 2022 is really the top of the dollar index? Well, we do have a strong bearish engulfing candlestick pattern here, and on each other time frame we've got more candlestick patterns that lead us to believe this could be a top. The technicals on our technical charts also support that view. So if we add everything up, including the fact that this is a ratio between currencies, fits well the oscillation up and over 100, which it has exhibited in the past. So let's move forward and see how we got our target below at 79.46 in our invalidation. So within a triangle, the subsequent wave usually mirrors the wave before it. So we start with wave B because wave A sets the precedent for wave B. In a triangle, wave B retraced 80% of wave A. Now with C to the downside, if this really was our top, we would see C retrace 80% just as B did of A. So target for cycle wave C to the downside currently sits at 79.46, and that's a long-term picture. Probably take a few years to get that. You can see just how long B took, so C definitely going to take a few years. Invalidation sits below at 70.69, that level were breached, this could potentially be a double zigzag or a zigzag to the downside. On the monthly chart, let's take off from the bottom of cycle wave A. Monthly chart here from cycle A shows largely the same information as the previous chart, but we do have a evening doji star back in September 2022 for this ginormous bear candle to the downside. Within cycle wave B, we have a WXY comprised of an A, B, C zigzag for W, A, B, C expanding flat for X, and A, B, C zigzag for Y. So a double zigzag. All waves inside of a triangle must be zigzags. So for cycle wave C, we're expecting an A, B, C zigzag, and these red waves are primary level. On the weekly chart, we'll take a look at this structure in more detail from the top of cycle wave B. Taking off from the top of cycle wave B, you can see we're currently working on the zigzag to the downside. The first leg in that zigzag is primary A, which would be comprised of 1, 2, 3, 4, 5 at intermediate level. And each wave at intermediate level is made up of these blue letters, which are minor degree. Another way you can tell that the trend may have shifted, you can see previously we had an impulsive structure which looks very different from a structure such as this, where price is moving sideways or against the main trend, or a structure such as this where price is moving sideways or against the main trend. Whenever you see long impulsive structures such as these, that tells you that the 1 degree higher trend is in that direction. So when we have a reversal like this, where the trend is obviously up and then the trend is obviously down, we could have seen a reversal, because now the threes, or the corrective structures, are moving against the main trend, and this is moving down with the 1 degree larger trend, which would be this A wave. Invalidation for this idea sits at 114.78. That would be where intermediate 2 moves beyond the start of intermediate 1, which starts right here at intermediate C. Intermediate 1 complete, and price recently has retraced almost exactly the 382 Fibonacci extension upwards, which is a common ratio for flat corrections, which I have here as minor A, B, C of a flat. On the daily chart, we'll take off from the bottom of intermediate 1, and I'll let you know why we've settled on a regular flat. Here's the bottom of intermediate wave 1. We have A, B, C, where B retraced just over 100% of minor wave A. Minor A is a zigzag, 5, 3, 5 to the upside. Minor B is an expanded flat, A, B, C to the downside, and minor C must subdivide as a motive structure. This structure could be a regular flat, where C usually ends approximately around the same level as A, and it must reach 105.36 to avoid the rare running flat scenario. We've drawn this Elliott channel from the start of A, and you put that on the end of B, and then you place a parallel copy on the end of A, and C often finds its end along the edge of this channel. Within minor C, structure must divide as a motive wave, and we have that as an impulse. 1, 2, 3, 4, 5 at minute level, and that's being made up of 1, 2, 3, 4, 5 green minuet level, and then that is also extending even further into these smaller degree waves, with the third of the third currently sitting right here. Invalidation for the current count sits at 101.78, and that is where wave 4 would enter the price territory of wave 1 in an impulse, this time at this orange sub-minuet level. Let's move on to the technical charts. This is the monthly technical chart for the dollar index. You can see we've had some recent bullish lower wicks in this area. Support sits just below our current price at 100. And this month we are working on this green candlestick, which looks pretty bullish, supporting the Elliott wave count. We've also had another pretty large bullish candlestick around this support level. So if we did break that level, I'd expect to see a further continuation of this downward movement. Resistance sits overhead at 112.2, and we had an evening star at the top on the monthly chart for September 2022. Recently, we've also seen in the past few years these topping reversal patterns are quite reliable. Evening star over here, and then the bottom we've also had a few reliable reversal patterns. ADX showing no clear trend, RSI is neutral, stochastics are neutral, and the average true range is increasing with the bearish movement. This is a correlation between the dollar index and the euro dollar. You can see it's a consistent high negative correlation. So you can see we have our 0% correlation here. If something wasn't statistically correlated, it would be in this area and the line would be around this area. But you can see we're constantly sitting at probably 90% or more straight up negative correlation. So you could see on the euro dollar, we had a long downtrend instead of an uptrend here. Moving averages. Overall, this pink line is the 1-year moving average, and the orange line is the 2-year moving average. They're both sloping up, and price is trading between them. Overall, I'd say they are bullish. This is the weekly chart for the dollar index. You can see our support around this 100 level. We had a morning star doji on the last bounce, and this bounce we had just has a strong bullish candlestick, which is almost a bullish engulfing candle. At the top, we had a large bearish engulfing and a hanging man here. This is the 200-day moving average. You can see price is trading below and it is sloping down. ADX indicates no trend, RSI is neutral, stochastics are neutral, and the average true range is declining overall as price moves lower. On the weekly, the correlation between the dollar and the euro dollar also sits at 90% with an inverse correlation. The daily technicals for the dollar index, you can see at the top we had an evening star and a previous dark cloud cover, and then towards the bottom we've had some bullish lower wicks around that support level of 100. And then we had a bullish engulfing here, here, and here before we took off. Moving averages are overall bearish, trading below the 200-day moving average, which is sloping down. 50-day overall was sloping down, now is flat, and 13 is now sloping up. ADX showed a strong bullish signal where it was trading below both DX lines, rapidly rose above the negative DX line, and is now showing a bull trend with a lot more to go before it reaches extreme. RSI is neutral, stochastics are overbought. ATR has been overall declining as price has been consolidating, so the range is shrinking. And on the daily chart, you can see the correlation is a little less with 75% plus, and then in times of volatility, that shrinks even further, and I've seen it as low as negative 45% correlation. So something to watch out for if there is a spike top or bottom. That's usually where these less correlated events occur. Overall, I believe the technicals support the bullish Elliott wave outlook for the short term and the bearish for the long term. That's all for me. Hope you guys have a good rest of your week.